Good morning, everyone, and thank you very much for joining me. This is the Morning Market Review. It's Friday, it's the 28th of April. My name is Russell Shaw, I'm a Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Just going to go ahead and bring up the disclaimers. We'll start off with our high-risk investment warning, and if I can just confirm, can you guys hear me, see me, and see the screen? I'm looking at two monitors, so if I'm not looking directly at the camera, I beg your pardon, I'm just taking a look at both screens. I don't have any confirmation yet. I'm going to take it that you can see me, can hear me, can see the screen. Let's bring up the market commentaries disclaimer. Okay, and just our reference screen, we'll be using MarketScope and TradingView.com. Let's go through to MarketScope first. We'll come to TradingView in a moment. I want to do a analysis on the S&P 500 just to start off with. And what we're going to do is peak and trough analysis. And that's going to help us determine the trend. So we'll put in our reference trough right over there. Let's make it a capital. We'll put in our reference peak right over here. Okay, now this is where it gets interesting. In December, we charted a higher trough. In February, we charted a higher peak. So by February, we had an uptrend, higher trough followed by a higher peak. So let's just move it there. So there was an uptrend, and it looked like the uptrend was continuing because here is the next higher trough, which was in March. And then what happened is we've got the lower peak. Okay, so we've lost some momentum here. Now, when you get a higher trough and a lower peak, you're actually getting a consolidation. What type of consolidation? Getting a triangle, right? So the S&P 500 moving in a sideways consolidation. But you can see some very interesting price action for this week. Let's just talk about this week's price action. So here we've got a dragonfly doji. Here we've got a dragonfly doji. In other words, bears try to sell the price down. They make it to the low of the week where the bears lose control to the bulls, and the bulls have pushed price right back up. And the bulls remain in control. So this is actually a bullish candle right on the border of the symmetrical triangle. And to get the breakout, we need to stay above 50 on the RSI, and we are above 50. We can see as we've moved sideways in this symmetrical triangle, we've actually oscillated around 50. So even the RSI showing signs of consolidation. In order to break out of a symmetrical triangle, we have to stay meaningfully over 50 for a period of time. So we'll just monitor that. It does look very interesting in terms of the price action. Let's just talk about what happened here. Why did the trend lose momentum? Why did we go from a higher trough, higher peak, higher trough to a lower peak? Why did we get that lower peak? And I think the answer to that is the banking crisis. Okay? So the banking crisis, what I've put here is the US banks. Now, we've just got to be mindful of what we're looking at with the US banks. We're looking at the large banks here. So there'll be Morgan Stanley, Citi would be in there, JP Morgan will be in there, Wells Fargo will be in there. But we're not looking at the regional banks. But the regional banks have had an influence on the way that the larger banks are trading. Now, what's happened is in March, about here. Okay, we had the crisis in confidence. Okay, the crisis in confidence happens around here. And you can see that the price gets pulled down heavily in the US bank side. What happens to the S&P 500? S&P 500 gets pulled down as well. And the US banks hasn't really recovered, has it? You can see it's made a lower peak over here. And that lower peak has heavily influenced the S&P 500. It's dragged that S&P 500. My main layout's just jamming up for a moment, but I think you can see that there is a lower peak here, and that's really influenced the S&P 500. Now, something else for us to take a look at is the balance sheet. So this is the Fed's balance sheet, and the Fed's balance sheet was actually coming down from a high of near 9 trillion. What happened was it's been quantitative tightening, effectively getting rid of the assets on the balance sheet. And then what happened was there was the confidence crisis of confidence in the banking sector. There was deposits that were being withdrawn at a heavy pace, and they looked to the central bank, to the Fed, for loan facilities. So the Fed made loan facilities available to them, and you can see that pushed the balance sheet back up. But now take a look what's happening. Balance sheet's starting to come down again. Now, what can we determine from that? If the balance sheet is starting to tighten up again, well then the loan facility obviously is not really being utilized. The run on the deposits, so to speak, calmed down. So it seems to suggest to me that the banks over here, okay, we probably got the worst behind us. If we've got the worst behind us, then I'm just going to change this layout over here because the other one's jammed up. Then it's quite likely that we're going to break out of that symmetrical triangle on the S&P 500. Let me just bring S&P 500 up again. So we've got some really nice price action here. Some really interesting price action here. The fact that that loan facility no longer in use, the fact that the Fed's balance sheet's starting to contract again, well, I think effectively the banking crisis, hopefully the worst behind us. Hopefully we got some value there. So let's just bring up the US banks. Let's just see if there's some value here. And what we'll do is we'll take a look. So we've got our zones. We've got zone 1, which is the upper red, upper blue. We've got neutral, that's the 2 blues. And then we've got zone 3, which is the lower blue, lower red. Zone 1 is the bullish zone. Zone 3 is the bearish zone. Zone 2, the neutral area. So we're kind of in neutral at the moment. We did see the banks recover going to zone 1. Then what happened? First Republic released its results. That seems to have launched a bit of a panic, a bit of a risk-off type of sentiment. Banks pushed down into the neutral area. Well, if the Fed's balance sheet has anything to say about it, then we probably can see the US banks going back into zone 1. Let's just take a look at this on a weekly basis. Okay, and you can see here is sort of the value area. Okay, so these are good companies at cheap prices. So there's probably a lot of value here at the moment. And here's the growth area. Okay, so we want to see if we can get back into this growth area. And it does look, just going back to that S&P 500, as if the market sentiment is suggesting positivity. Here is that Dragonfly Doji. Okay, so the S&P 500 looking very interesting. Let's just take a look at the DAX, see how the DAX is charting. And let's go back to the daily here. Let's do a top-down analysis. You can see that we've got the higher trough followed by the higher peak, higher trough. So a series of higher trough, higher peaks. I really like this RSI, just running smoothly between 50 and 80. You can see that we are in zone 1, okay, on the daily chart. Take a look at the Bollinger Bands. Bollinger Bands starting to squeeze, okay, just as we're starting to see the S&P come through with a dragonfly doji, okay. Let's just go down to the hourly here, and you can see we've got a positive cross here on the DAX. And not only do we have a positive cross, take a look where the stochastic is. That stochastic's in that upper quintile. If we can hold that upper quintile, then I think the sentiment's now swinging to that risk on. Okay, so let's just go through the hypothesis again. We started off with the S&P 500. Okay, the S&P 500 really showing a good candlestick here for the week, dragonfly doji. We went back and we took a look at the balance sheet of the Fed. The Fed balance sheet starting to contract again. The only reason that could be contracting is that the worst is behind us. If the worst is behind us, then possibly get the breakout. Get the breakout. Yeah, see it come up. Now, if that lifts sentiment, if that gives us that risk on sentiment, go through to the DAX. All right, and you can see the DAX, lovely uptrend, beautiful zone 1, nice squeeze on the Bollingers, the RSI on the daily looking really good, and you can see the stochastic hanging around in that upper quintile, looking very interesting indeed. Now, we want to watch the US dollar as well. Let's just bring up the US dollar. Top-down analysis here as well. So there has been some dollar strength. Ideally, what I would expect is for the topping pattern, for this potential head and shoulders to move towards the neckline if we have that risk on. So I'm suggesting that there is a potential for a risk on. If we want to see dollar pull back, that's going to rely very heavily on the US core PCE that comes out today. So just bear in mind, core PCE at 12:30 GMT going to be very heavy in terms of driving the market today. If we get a relaxation in that core PCE, and remember we looked at it earlier in the week and we looked at GDP earlier in the week, both of their rate of change is showing deceleration. Guess what? US GDP did come in softer than expected. I wonder if we see similar with core PCE, then potentially get the pull down in the dollar. That turns potentially into that risk on. We see the stock markets potentially lift. What's driving that? Lower interest rates. Let's take a look at this on the daily chart. Daily chart moving sideways. It is shifting into zone 1, so we'll just watch this carefully, okay? But I think that we're going to have to work on the US dollar on Monday when we have more complete information. What do I mean more complete information? Then we get the US core PCE coming through. Okay, one more chart for this morning. Let's just take a look at the Euro US dollar. Okay, Euro US dollar broken at 110 is looking really good, isn't it? Higher trough, higher peak, higher trough, higher peak, higher trough, higher peak. We've looked at this in terms of the relative hawkishness of the ECB over the Fed. That seems to be the order of the day. Let's see what happens with core PCE. That could be an influence there. If we go through to the daily chart, sitting nicely in zone 1. Take a look where the RSI is. Above 50, below 80, running along smoothly on the positive side of the RSI. Take a look at the H1. Now take a look very carefully here. Okay, we're starting to get some sort of We're starting to get some sort of movement here. Okay, signal 1, potential signal 2, and then if we get that, in order for a swing to materialize, we would need to get a movement of the stochastic into that upper quintile. So this is one to put onto the watch list as well. So it all stems from a breakout of that symmetrical triangle from the S&P 500. Does that happen? Doesn't it happen? I think we're getting a tendency towards a risk on. Let's just see if the economic data actually supports that view or not. All right, if there's any questions, please go ahead and type those in. Any questions, please go ahead, type those in. I just want to put my watermark back. All right, nothing coming through. So let us conclude at this point. I want to wish everyone a good day, good weekend ahead. Monday is a public holiday, so we will pick up again on Tuesday morning. So speak to you guys on Tuesday morning. Thanks very much, guys. Cheers.